So Google recently beat their Q4 2021 earnings expectations and the stock is down. Even with their 20-for-1 stock split news, it did rally for a bit, but it didn't last for too long. I mean, it's not just Google, it's the whole entire market. Bogdanov literally said,
"Don't beat."
And it's literally just doing that. But if you guys watched the first Google stock price video that I made, we had a sales target price of $250 billion and a net income target price of $69 billion for the year of 2021. Well, as mentioned before, they crushed it, they beat the earnings, and they finished the year officially off with $258 billion in sales and $76 billion in net income, which is just amazing. Hey guys, I'm Curious Pejjy, and I'm a very curious guy. I'm curious to know, and probably you are too, if Google is still a good long-term hold, and if right now is a good time to accumulate shares, hold them for the long term, or even if you're probably thinking about to start a position right now because they're doing a 20-for-1 split, or overall you're thinking that nah, Google's not for me, sell it and just put it into something else. Well, in this video we're going to go over a prediction that hopefully can answer that question. There's no doubt that Google is a safe and solid investment. So if you guys are thinking that Google might go bankrupt in a year or two, that's not really going to happen. And that's because Google has a lot of future plans, they own a lot of companies, and they're really well diversified. If you guys want more insight on Google, check out the first Google prediction I made. There's a boatload of information that you guys can get a lot of value of, and some things you probably didn't know about Google either, so check it out. But enough chit chatting, let's get to the updated prediction video. All I ask in return is a like and subscribing if you haven't already. Let's get into it. All right, so as you guys know, in 2021, Google smashed their earnings. I mean, for the whole entire year, we had a sales target of like 250, they did 258, and a net income at a price target of 69, and it was at 76, which is, you know, they did really well. They did extremely well. For the revenue and profit for 2022 and onwards, the best place I found was obviously simply Wall Street. That's what we used in the first video. So we're gonna continue using it because they are pretty, they're close to the numbers. They're not always 100%. No estimation is 100%, but their estimation is actually pretty good. I like them. So they had an estimation from 2022 to 2024, and this is what they were. We can see in 2022, the target price for total revenues is about 302 billion, 2023 at 350 billion, and 2024 almost at 400 billion. But then the net income is a bit interesting. In 2022, they're saying that they should hit 77 billion, which is odd because that's only 1 billion more from 2021. So it's like, why, you know, you have this massive growth, why they only say 1 billion? The only explanation that I can come up with is that in 2022, most likely, well, not most likely, it's probably going to happen, the pandemic's going to come to an end. So most likely, most people will not stay at home. They'll probably go out, do the things that they missed out on for 2 years. So they're saying that maybe not much users will be up online as they would be. Another reason could be is that interest rates are going up, and that could dampen the net income for all the companies, not just Google. Another explanation could be is that they could be doing investments throughout 2022, which they've been doing for the past years, as we can see in the past performance. So there's many reasons. So I think they're taking that into play. They're keeping things conservative, which I like. If you guys been following for some time, I like it when things are conservative. So that's why they're saying 77 billion. But the year after that, in 2023, it's going to be a massive jump to 90 billion. And in 2024, another jump to 103 billion. So not bad. We're all saying the same thing, that Google's going to continue to grow. That's the main thing. Now from 2025 to 2030 is going to be the hard part. We don't know because no one can really think that long into the future. So we took things in our own hands. And in the first video, if you guys watched the first Google stock price video, the prediction video, we said 15% year-over-year growth for revenue. And adjusted to these new numbers, we get about almost a trillion, 992 billion by 2030, which I honestly think they could do more than that, but keeping things conservative here, 992 billion. And for net income, we said 14%. I want to continue and leave it at 14. And that would give us a total net income of 225 billion, which is not bad at all. Now, this is the interesting part, the shares outstanding. So in 2022, previously we predicted that by 2022, they should have a shares outstanding by about 718 million shares. But instead, they have now about 689 million shares outstanding. So it looks like Google did more buybacks than anticipated, which is a good thing when it comes to our return. But the stock market is saying something else. There's a lot of sell-off going on. So what does this mean? In my opinion, this is a buying opportunity for Google, but this is my own opinion. But the more interesting part comes here is that Google announced a 20-for-1 split. So obviously that gives everyone, I mean, split doesn't mean anything when it comes down to a stock. It just means that I could buy at an easier price, not at a cheaper price, but at an easier price. I can finally buy one share compared to a fractional share, which honestly, it was long due for Google. I just hope now Amazon can do it. But anyways, they did 20-for-1 split, which is just absolutely crazy. I don't know any other company recently has done 20-for-1 split. So that's crazy. So we're gonna go ahead and do that with an assumption of 1% buyback every single year. So we're gonna assume that Google is gonna buy back their shares at a 1% rate, because that's what Google's been doing for the past decade. They've been buying back their own shares. So let's first go ahead and put the original shares right now, and then let's multiply by 20, and this is what we get. Bam, look at that. So from 600 million shares, now we're up into the 14 billion shares outstanding. But that reflects in the stock price as well, and we'll get to that in just a second. The EPS follows that as well, and you can see from like 2021, the EPS was at 104, and now it's at $5.61, estimated to be for 2022 this year. And that massive reduction from 104 to like $5 or $6 is because of the 20-for-1 split. It just makes things a lot more compatible, makes a lot sense, because you have a lot more shares outstanding because of the split. Now we're gonna go ahead and talk about the PE. We can see from the chart, they've only been stabilized around 30. So we're gonna go ahead and change the PE. We're gonna have three different scenarios for PE. We're gonna have a cheap one, a medium one, and a premium one. And none of them are going to be over valued or anything, but it's just how much people are willing to pay for Google based on the PE. And we're first going to do 25 as being the first PE. Now in 2022, at the moment, when this video comes out, I think it's going to be on a Tuesday or a Wednesday. PE is going to differ, but at the current moment, which is a Sunday right now, it's at $23.94. So once we put that in, the stock price right now is a $134 adjusted for 20-for-1 split. If you multiply that by 20, it'll be $26.85, which that's what it is at the moment. That's what you see on Yahoo Finance. But if you do 20-for-1 split, it's about $134 per share. So we're gonna go ahead and drag 25 all the way from 2023 all the way to 2030, and this is what we get on a yearly basis. In 2023, we get a stock price of 165, market cap almost being at 2.25 trillion. 2024 stock price should be 190. 2025 stock price should be 219. 2026 it should be around 250. 2027 should be almost at 300 at 290. 2028 it should be around $334 per share with a market cap exceeding 4 trillion. 2029 stock price should be 384, market cap at almost 5 trillion, and in 2030 stock price should be $442 with a market cap almost hitting 6 trillion, like 5.6 trillion at a market cap. Now that's with a PE of 25. I personally think that if we see Google around the 25 mark, it means two things. One, it's highly matured. I personally think Google has so much room to grow and they have so much opportunities ahead of them. I don't think 25 or them being heavily mature at this stage or in this decade is going to happen. I think 30 is a better PE to give it rather than 25. Let me know if you guys agree in the comments down below, but I'm gonna put 30 here, and this is what we get. And that's the massive difference that we get. Instead of $442 per share by 2030, it's gonna be about $531 per share, which is not bad. You know, that's reasonable in my opinion. But again, when I look at the valuation of being 6 or 7 trillion by 2030, I don't think that's right. I think they're gonna have a much more higher market cap by 2030. Forget the stock price, man. Look at the valuation. If the valuation is higher, the stock price is going to be higher, no duh. But 6.5, almost 7 trillion by 2030, I highly doubt that's going to be the case. Because if we look at 2020 to 2022, there was almost a 25% increase even with this correction that we're having now. Obviously, Google is oversold in my opinion. If you have like savings that you don't want to do, I would recommend you guys to buy it. Not financial advice, but I'm saying it's oversold in my opinion. So I think in 2022, we can see this number being probably in the 2 trillions and plus. I mean, no doubt about that after they increase the interest rates, hikes, and all that kind of stuff. Now let's go ahead and give it a premium PE of 35, and this is what we get. And we get a stock price of 619 per share with almost an 8 trillion market cap by 2030. So we went from 442 in like cheap PE, I guess. And then in the base case, which is about $531 per share, and in the premium case of 35 PE was at 619 per share. And again, I still think almost 8 trillion by 2030. I think that's still I think they're gonna exceed 10 trillion in my opinion by 2030 because Google, they just have so much market share, they have so much opportunities, and they're making deals left and right. You know, the latest deal they've made, well, I don't think it's the latest deal, but one of the big deals that they made was with Starlink, SpaceX Starlink. The deal was is that Starlink can use their fiber optics, their networks all across the world, which that's what Google has it all across the world for Starlink's internet. And that's a massive deal. You know, this can bring a lot of revenue for Google, which we don't have the data for yet. So obviously when that comes in and when they have other big things happening, I highly do believe that Google is going to be one of the biggest performers for the decade. I really do believe that. But looking at Simply's Wall Street's valuation, they're saying that Google right now is extremely undervalued and the stock price should be around $5,002 per share. Adjusted for 20-for-1 split, that's about $250 per share. Let's put that in and let's see what happens. So in order to get $250 per share, the PE, after doing some calculations, the PE was about almost 44.5, my mistake. And once we put that in and drag it, and they're saying by 2030, $788 per share with a market cap of 10 trillion. To be honest with you, I did mention that by 2030, I believe that this market cap should be over 10 trillion. But I don't think with the PE of 44.5 is correct. So I really do believe that the revenue and net income is going to exceed expectations. They're going to find other routes, other ways to make more money. Again, with the SpaceX deal, with the Starlink and all that kind of stuff, that's massive. That's going to bring big business to Google itself. I don't think a PE of 44.5 is going to be the case by 2030. I think 30 is fine, but their revenue and net income is going to be massive, much more than we have here in my opinion. But again, this is only a prediction and a prediction only. Don't take this to heart just because you heard a YouTuber say it. That doesn't mean you should go all in on Google. There's always more research to do. But anywho, this is the chart that you get for a 25 PE, a 30 PE, a 35 PE, and a 44.5 PE. So you guys can see the difference, but they're all going one way, they're going upwards. So yeah, everyone can agree that Google is not going to go bankrupt within a year or two. I mean, that's just ridiculous. Now, there's one thing that I do want to point out about these charts is that it's all linear. Obviously, when you look at the stock market, it's never really linear. I mean, look at Google stock. You know, you have these massive dips. Obviously, when you zoom in, it looks like the stock is going to zero. You know, it seems like the world is going to go to an end. But when you guys zoom out, you can see that it's just a little blink and it was just a big buying opportunity. Just like what it is now. But what I'm trying to say here is that just because the chart is linear, the stock is not going to be linear. Maybe this year and next year and the year after, it may hit these numbers, but we may have a year or two where it just crashes 30%, stays there for 2 years, 3 years, but then fundamentals always win, and then it comes back to what it's really valued. That's what the stock market is known at. A good example is when you look at Tesla. A good example is when you look at Apple. They all zoom up back to the fundamentals. Microsoft even. Microsoft has the best one in my opinion, the best chart. They all zoom up back to their fundamental valued numbers. So that's why it's always really important to do your research and believe in the company that you invest in. So when it does run up like that, you can look like a king, buy them Lambos and the mansions, and tell your friends, I told you so. But again, guys, it's just a prediction, nothing more and nothing less, so take everything with a grain of salt. Now, a few things about Google. Google is a monster. You cannot compete with Google. Google pretty much owns the entire internet. You know, Google search, YouTube, obviously, Google and YouTube is owned by Google, obviously, and there's not much you can do. I mean, I don't see any platform coming out that can really compete with YouTube. If you want to think about TikTok, well, does TikTok share 55% of their revenue to their users? They don't. Do they have the amount of advertisers that YouTube has? Absolutely not. If there's anyone that TikTok is hurting, it's Facebook, and we can see it. But it's not hurting Google. Google, I would say YouTube is more of a monopoly right now. I don't know what the next disrupting platform is going to be, but it's going to be very, very hard to beat YouTube, because if something does come, right? We can assume that something can come that can disrupt YouTube. All YouTube has to do to make that other platform less important or get it less attention or just knock it off its way is to increase the creator fund from 55% to maybe 65%, 70%, right? This will literally say, okay, YouTube already has all this advertising money coming in. The other platform is gonna have a hard time to have the same amount of YouTube and the same amount of views because it's owned by Google. Google will always put YouTube, their own products first. And since they own pretty much the whole internet, it's kind of a monopoly. It's going to be really hard for them. So there's no way that I can see YouTube that can get disrupted really, really bad. And besides, all the kids today that are watching on their phones, on their iPads, on their mobiles, on their laptops, computer PCs, whatever, is pretty much YouTube. YouTube, you can say, is the next gen of TV. TV is going away and YouTube is taking its place. That's what's happening. So we know that Google search, YouTube, and their products that dominates the internet is gonna be dominated for a long time by Google. There's no question about that. Now, what made me really bullish on Google is the SpaceX Starlink deal. Guys, Starlink, the idea of it, the purpose of it is massive opportunity, man. SpaceX will become a cash cow because of Starlink. Think about it. Once Starlink is 100% ready to use and you can use it as a service, you could be in the middle of Atlantic Ocean, not have food, be stranded, but you'll have fast internet. You can be in Antarctica, stranded in Antarctica, don't have food, water, or anything, but you have internet. You're on the airplane, going from one city to another, one country to another, and you have fast internet. I mean, this is a big deal, guys. I don't think you guys understand how big deal of Starlink is. And the fact that Google, they have a deal with Google for Starlink all around the world with their fiber optics and their cloud is just gonna be a massive revenue and profit taking for Google. No question about it. And not to mention the Tesla's Pi phone that Tesla's making a phone. I'm not too sure if they will actually execute through and make the phone. But if they do make a phone, it's gonna be Android back. So that's more revenue and profit for Google. So honestly, I'm more bullish on Google than I am with Apple. Google has just so much more room to grow, has so much more venues and more revenues to make money that it's not even funny, man. So in my opinion, should you go all in on Google despite all the information we had today? Personally, if I had the money, I'd definitely buy quite a bit of shares of Google at the moment. The price seems to be cheap in my opinion, only 23 PE. What is this? And it's just overreacting. The whole market is overreacting, man. If you got money, you can buy literally all the good companies, but Google definitely is gonna be one of them that you can buy and hold long term. I don't recommend selling, but I do highly recommend buying. And if you don't have the money, I do recommend holding if you have some shares. Because Google, man, has a great long-term success and they're gonna be here for a long time. Maybe in the short term, it could probably even dip even more. But if it does, just think of this as a buying opportunity because you're in it in the long run. You're not in it for the next year or 2 years or 3 years, at least I hope. You should be in it for at least 5 years and onwards. That's where you're gonna make a lot of money. So that's my opinion when it comes down to Google stock. And that's gonna conclude today's Google stock price update. I hope you guys enjoyed this video. And if you guys did, smash that like button. That'll really help me out and the channel. And if you guys really did enjoy this video, man, you guys will definitely enjoy this Tesla stock prediction video with full self-driving included. Man, again, in that video I mentioned multiple times, I cannot comprehend the numbers, but I'll let you guys to judge. Don't forget to subscribe and I shall see you guys in the next video. See ya.